we discussed dangerous falling coming
stocks are going to go up.
because a lot of options
or
trading.
company,
Let's see.
those stocks are going to go down. But if the index is pinned, by definition, this is market making for you guys, right? This is arbitrage. That means something has to go up if the market's pinned. And that leads to correlation breakdown. The greatest dispersion we saw up until 2017, we saw was very low relative to what we saw in 17. Why was 17 so different? I was down there in the pits trading against the massive increase in iron condors and all the selling of vol at the index level. To an extent, there's actually
Google went down, unfortunately,
in the market in August,
because
to give you guys
capital expenditure.
By 300,000
Can it go up?
1x3s.
Probably. We'll see.
You remember that?
Going out on that.
Let's see.
This
VO.
environment, though, is like such a unique environment in that, we have obviously what's going on with the chips. We've seen plenty of days where we see this rotation into a lot of those consumer staples names. You're seeing, even within tech, you're seeing this software move, right? That's happening because AI is eating software.
Jamal, it's not AI eating software. That's
what's happening.
That's the narrative.
Whether that's actually happening is different. What we're looking at and we see in those stocks.
Who will see what can happen? VO.
Microsoft, of all people, for Christ's sakes, getting rocked, right?
But I want to explain.
Can it go up more?
Narrative is always macro. Because people love stories.
And then,
magnificent.
magnificent.
I'm not saying it doesn't matter, okay? But I'm saying that particularly in the summer, in general it's true, but in the summer, flows tend to be dominant. That record dispersion,
Magnificent 7.
Actually, if you listen in May, we were very adamant about not only would we see record dispersion, but we were able to pinpoint to where that dispersion
You see,
would
this
come
is
from, which
support.
was selling.
Can it go back
the
to 60?
leadership,
Yes.
Right, the semis, et cetera, that had rallied as much as they
It
had,
was
and buying the other
in
parts of the
March.
market broadly. Why were we able to do that? Very simple. Vol compression at the index level, call writing, et cetera, on the index level. But what was happening on that part of the market? Record call positioning out of the money. Record implied volatility.
You see Tesla is
record
down.
Call skew.
Yes, put
And
all
once you
questions
do
in
that,
chat.
those names which
Chat
have
is
been
open.
flying, they have to keep up that pace. And if they don't, what happens? Dealers are short those calls, long stock. So right as dealers are buying back their stock on the decaying vol and the vol compression of
Can
the
it go
index
down?
level, what's happening at that part of the market?
Yeah, sure.
Every day.
Let's
The
see memory
bottom
chips.
flows go the opposite way. They're selling that area of the
Yes,
market.
hello, subscribe, give like to this video.
Once something slows
We're
down, it
discussing
can't keep that up.
that stocks can go down more. Put in chat what stocks did you buy, how much money did you make. Yes, chat is open. Yes, hello, hello. And we recommend memory chips. You see, today memory chips is up. Yes, hi, hi. Hello, subscribe, give like to this video. We go live every day and discuss about stocks, real estate, how make money. That's why subscribe, give like to this video. Bitcoin, I see a question about Bitcoin. Bitcoin can go down. See reports. Some people said it can go down to 30,000. It depends. When did you buy? Because I bought a long time ago when it was 15,000. So for me, it's fine. But right now, take a look Bitcoin. You see it's bearish trend. 1 year, almost 50%. Put in a chart, when did you buy and for how much? Again, if you bought it here, for example, 2017, when it was 2,000, it's fine. But some people bought it 100,000 because it's just pure speculation. You know about Bitcoin. Not only Bitcoin, let's see, all of them have volatility. That's why stocks are much more better than crypto. Take a look, because all crypto is down. Why do you need crypto if you can make a lot of money using, you see crypto is down. And I show you many times, you can invest, for example, SanDisk. And SanDisk made 10x in 1 year. Take a look. It's better than Bitcoin even. That's why what's the point to waste money on Bitcoin? Because it was super cycle. Take a look. You can buy it here for $400 and then sell to 1,000. It's much more better than Bitcoin. And it's a company that really produced product. do you use? It's a SanDisk memory chips. It's much more better. Bitcoin, it's mostly speculation. There is no real product. I'll put in chat, why did you buy Bitcoin? What was the reason?
That is going to be a meaningful sale again at the end of the month.
Of course, it's super volatile, but memory chips are much more better than crypto. Crypto, it's pure speculation. You buy and you sell.
Through the into post-August OPEX vol, now this is the important thing. The trade is not just what to buy and what to sell, right? This is a lot of vol.
And then, if you don't know how to invest in 500, S&P 500, VO. It's always going up. For example, if you buy it,
This is why fall
because if indexes, American indexes going down, the whole economy will go down.
because the vol
Take a look.
structural
Even during COVID, up, small correction, but long term, it's always up. That's why it's better to invest in long-term position like this. Why something risky? Why crypto? Crypto, you invest very quickly, like pump and dump, and then take money and invest in long-term positions like this. And I see you said you are saying good, thinking about your opinion.
sitting out there, you have a lot of short skew.
I prefer long-term investments. Like here, take a look. It's a Vanguard 500, and the expense ratio is 0.03. You pay just $30 if you invest 10,000, and they pay dividends as well. It's much more stable, I think, much more better. If you invest in crypto, it has to be pumped and dump. You can say like this: pump, make money, and run quickly. It's not long-term investment. And we discussed that you buy, for example, VO, and then go trade and sell cover calls against it. It's like renting your stocks. We discussed in previous video. I see you said you have 20,000 American dollars, USDT. And because it's better to invest long term, because research shows long term investments much more better than short term. And dollar, of course, loses value day by day. That's why this type of investments. And using only a good platform, see in Links, Schwab, or Fidelity, never invest in some risky. And let's discuss what can happen. Can stocks go down? Yes? Yes, let's discuss crude oil. Oil is going
Now
up.
we get into capital and macro. What the administration is doing here, I don't know that we have enough time to cover everything here today, but is really setting up for a lean on the US dollar to, the exorbitant privilege of the dollar, to print and buy equities. That's where we're heading. Now, this isn't today, tomorrow. This is next
Yes.
year in preparation for 2028. And that's a longer conversation which we can have. Done a lot of work on that and feel very confident that all the pieces are being put in place. That's what the sovereign wealth fund's for. That's what the Trump accounts are for. Again, there's precedent. Japan owns over 8% of the Nikkei. The sovereign wealth fund in Norway is $3 trillion. How big do you think our sovereign
You
wealth
from Pakistan? Yes, subscribe, give like to
Why do
this
you think
video.
they're
Yes,
building
put
it?
questions.
Given that markets are too big to
What
fail,
stocks
given
do you
that
buy?
2028 is-
Do you invest in American stock
so
market?
that's what's coming, but what you're seeing now is also preparations for that. So you hear about all the, we're in there for the nuclear material, whatever in Iran. No, we're there to control the Strait of Hormuz.
Let's
We're there to
discuss.
control-
We
My name's
know.
Mike, I'm here with Jamal. We got Tim Knight on the line. And Tim, it is a red day. Gotta be driving, if I were to guess.
Yes, it is in fact, I was thinking one of the changes we should make to this show
Yes, but don't forget
would be to determine
that subscribe. Yes, we go live every day. And
Do
let
you have what it takes to get hired
and
as a
let's
real
discuss.
think I would have succeeded? Chicago office. Here is how you need to think. Ability, this person succeeds, and the magnitude of that success if they was interviewing, I intentionally chose firms like Trillium or
let's discuss about
Selling
options.
options has become my favorite trading strategy. And it seems simple, but one bad trade can decimate your profits like that. In fact, my biggest losses happened when I violated one of the 4 golden rules that are essential for selling options safely. Let me be crystal clear. Selling options is dangerous, especially when you sell them naked. meaning you don't own the underlying security. But when done in a safer manner, it can be quite lucrative. Notice, I never said safe because there's always risk in trading. That's exactly why I always review my 4-rule checklist before selling naked options. If you violate even one of them, you are playing with fire. And don't say I didn't warn you. And don't worry, I'll walk you through some real-world examples at the end of this video to help you apply these rules to your own trading. If you're new here, I'm Lance, and I made over $100 million
Yes, let's discuss options.
option very quickly, especially with short-dated contracts. And what once felt like a controlled risk becomes something much bigger. During periods of heightened volatility, there's another risk most traders don't factor in: margin changes. Brokers and exchanges can raise margin requirements quickly, which means the position you thought you could comfortably hold suddenly requires more capital. If you don't have it, you're forced to reduce or close the trade, often at the worst possible time. We saw this clearly during the sharp moves
Margin
in gold
call.
and silver in early 2026 when the CME repeatedly increased margin requirements, forcing traders out of positions as volatility surged. Even if your idea is right longer term, you may not survive the path. Then the psychological side kicks in. When losses grow faster than expected, decision-making breaks down. Instead of following a plan, traders freeze, hope, or panic. The size of the position starts controlling them. And in fast markets, especially with options, there's often no clean exit. There's gonna be spreads, liquidity can disappear, and you're gonna be forced into closing a position at worse prices. That's why option sizing has to be far more conservative than most people think. The risk isn't just what you plan to lose. It's how quickly things can change and go past that. Smaller size helps you keep in control. Bigger size puts you in a position where one bad move can spiral. Over time, it's not the bad trades that matter. It's whether you are sized correctly when they happened. Here's a practical rule for you. I try to always size so that even if the option premium doubled against me and doubled against me again, I would still be okay with it. That's super conservative. And another rule of thumb, if you are losing sleep or constantly checking quotes nonstop, you are probably oversized. I tell this to every trader I mentor. Always, always, always size your naked options far more conservatively than you imagine. Selling options is all about stacking wins over time and avoiding the big whammy. Survival first, always. On to rule 4. Only sell options with expiries within the window you actually want to see the move occur. Most of the options I sell tend to expire the same week, often with only even just a few days left. The further out you go on expiration, the more you expose yourself to market risk and headline risk. There are totally valid reasons to go far out with certain option expiries. For example, the leveraged ETFs tend to decay in price over time, but when you choose expiry, you're choosing your risk window. And being a short-term trader, I tend to have the strongest views about what will happen over the next day or two, not the next month or two. Additionally, short-dated, out-of-the-money options decay hard when a sharp price move doesn't occur. Essentially, your option expiration should always match the window of your thesis. Don't fall for the trap of thinking you want to go further out to collect more time value. Often that time value comes with more risk. Now let's dive into a couple examples of what I thought were amazing places to sell options premium. First, let's look at TIGR in October 2024. Chinese stocks had been exploding higher due to a huge wave of government stimulus, mixed with a sharp change in investor sentiment. Even large cap Chinese names were moving 30% or more over the course of a few weeks. Meanwhile, TIGR, which is a Chinese stock brokerage, really exploded higher. On October 7th, the stock capped up significantly. The equity was worthwhile for shorting, but the options were also incredible. That day, I sold the October 18th, 2024 call option with a $16 strike for almost $2. That is the advantage of waiting for the implied volatility to really blow out. The stock had already nearly quadrupled. Yet while the stock was at $14, you could give yourself another $4 cushion. It isn't that the stock couldn't have gone higher. Of course it could have. My point is, though, that the probabilities were far in my favor, and should I have ended up getting assigned short the stock, that would have been a position I wanted anyways. Those that follow my trading course will recognize this as one of my favorite exhaustion gap technical patterns. Remember how in Rule 2 I mentioned that little
Yes,
trick
hello,
of
Manny. Hi, hi,
annotating
hi.
my options
Subscribe, give
break
like.
even on the chart so that I can visually see what the move would look like? Well, look where the $18 break even is on this chart. Yup, for just over a week of exposure, I like selling those calls very much. Another example more recently is in Bitcoin. We spent all of December 2025 and January 2026 in no man's land between $80,000 and $100,000. That is when most traders will see the range and how boring the price action
Yes,
is.
hello,
They'll
subscribe,
start
give like to
selling
this
put
video.
options, because again, we're range bound and
We're
boring.
discussing.
What could go
And
wrong?
it's better to
Well,
invest
that's precisely
long-term
when we don't
VO.
wanna do
Take a
it.
look,
Sure
VO.
enough, we break the bottom of the range,
Long-term
jump
going
over
up.
$15,000.
Take a look. If you
As
invest
we make
here,
a big move lower and implied
S&P
volatility
500
explodes higher,
is
that
going
is
up, up,
then when
up.
we do wanna
It's
sell
better than
put
individual
options.
stocks.
One other bonus
Take a look
tip I'll
again.
sneak in here to
Ticker
those who are watching till the
VOO.
end. No matter what you trade,
Yeah, subscribe, give like to this video.
particularly
Put
with
questions in
options,
comments.
shorting calls is infinitely more
I
dangerous
see
than
questions
selling
about
puts.
Apple.
Because there's no lower bound
Apple
of zero.
increase
There will be times when
price for
stocks make
products.
far crazier moves than you've ever
We'll see
imagined.
how
Moves
people
like we've
react.
seen in silver, the quantum computing names, and more. With selling calls, you always need to be far more conservative
SLV.
than with selling puts. And that's even true for shorting stocks. If you take away anything
Let's see,
from this
SLV.
video, remember to avoid selling options.
Do you remember
with
it
tons of
went
no man's land.
up
Use an
significantly in
appropriate
January,
strike,
then went
expiration,
down?
and contract size. Selling options is incredibly
The same
dangerous
about
because
gold.
people get
Went up
complacent
and
by their
down.
high
It's very
win rates.
risky.
So no matter what, all normal risk management rules still apply. You do not
Let's see
want to
gold.
be averaging into a losing
Yes,
position.
hello,
You
hello
wanna
everyone.
follow
Subscribe,
your
give like
normal
to this
loss
video.
tolerance, and you never
Gold.
wanna get too
Gold
confident.
always going
You
up
need to
when it
always remember that the margin utilized one
some
day at a time
uncertainty
will be far
or
higher
difficult to
than
make money in different industries. But here, take a look. People who invest in gold right now will lose money. Yes, it's better to invest in memory chips, and we discuss
follow them.
in previous videos. Take a look, SanDisk. SanDisk made a lot of money. We invested here for $27 and then 100% X, and you sold for 2,000. What do you think? It's a good deal? Better than Bitcoin, better than any crazy stuff, because this one is in demand. Yes, put in comments which one did you invest. SanDisk, Micron, Western Digital. Take a look. You can buy for $60 and then sell 20 times X for 1,300. The same Western Digital. Yes, put your question in comments. Subscribe, give like to this video. Western Digital, the same. You buy for $25 and then sell 800. Right now it's a small correction, but it's temporary for sure. You see how much money you can make. You invest here, and in 1 year you make this money. It's better than Bitcoin, better than crypto, a reliable American company. The same Seagate. Seagate Technology. That's why I put in comments what company do you invest, how much money did you make. Seagate Technology. You buy for $57 and in 1 year you sell for 1,145. What do you think? Is it a good deal? Good. Better than Bitcoin, better than oil, silver. Because right now, because AI boom, everything is in demand. I see a question about oil. Yes, let's see oil. Light sweet crude oil futures. Oi, it's very risky. Take a look. Do you remember 2008 went up, went down? It's up and down. It's very, very risky. I will never invest in this. Because geopolitics and all this stuff play a role. Bitcoin? No. Bitcoin is a derivative. It's speculative. If you like speculation, yes. Bitcoin futures. Take a look, BTC. Went up and right now down. And some people lost 50%. No. Do you invest in crypto? I don't. You can invest just index, SPX. That's it. You can buy ETF. Because VO is cheaper. It's only 0.03%. So you pay only $30 for 10,000. For me, it's much more better. Yes, put in comments where did you invest? How much money did you make? If it's profitable
You're reacting to every candle and checking
for you.
24/7 wears on your nervous system over time.
Because this one is better. What do you think? You can make a screenshot of this and see. You invest here and then it's going up, up, up. Subscribe, give like to this video. Yes, I see questions. Yes, we discussed memory chips in previous video.
Essence of every strategy I use. Today I'm going Whether it's Forex,
Если дискать.
futures, equities,
Yes,
or
Forex,
crypto,
crypto.
I've traded all of these. Some of them enabled me to make over $100 million in verified trading profits. I'm Lance, and after spending over 15 years grinding, I'm done sacrificing my health for wealth. So I'm here to share with you my world-class knowledge and show you the reality of trading, including why some traders are doomed before they tell you the liquidity, which is how scalable the market is, fees, broker safety, and then the quality of competition you're trading against. A lot of my argument really isn't all that subjective. It's based on an academic concept called market efficiency. Now, let's define market efficiency properly because everything flows from that. The classic finance definition is basically this. A market is efficient if prices fully reflect all available information. If so, excess market returns cannot be made. In other words, no amount of technical analysis or fundamental analysis, or really any analysis, allows you to beat the market. As a general framework, the bigger the market, the more globally followed it is, the more accessible it is, the more sophisticated the players are, and the more stable the environment, the more efficient the market tends to be. And when a market is extremely efficient, you can still trade it, but the bar to make money is far higher. The edge is smaller. And the more you trade, the harder it is to make money over the long term. So now let's run the scoreboard and start with the worst of the four asset classes, Forex. Number of opportunities, on paper, it's always moving. It's 24 hours, 5 days a week. But most of that movement is total noise and unpredictable chop.
Yes,
Currency
Forex.
markets don't move much. And before all the Forex bros say that the lack of movement isn't a big deal because Forex markets provide easy leverage, you need to understand that leverage does not make up for that. Leverage does not create edge. It just scales whatever edge you already have. In an efficient market, your edge is basically zero after cost, meaning your expected value is about zero before fees and usually negative after fees. So if your expectancy is negative, leverage just makes you lose faster. I know that sounds wonky and the Forex bros don't want to hear it, but if you don't want to believe me, ask ChatGPT to explain it to you, because I'm done arguing this leverage point with anons. Leverage does not increase your expected value. It just allows you to increase the bet size. Now, for liquidity and scalability, in Forex, it's massive. Forex is the largest market in the world, estimated at about $9.6 trillion per day in trading volume. That sounds like a dream until you realize what it implies. The competition is unreal. As far as this quality of competition, it's the killer. Forex is dominated by banks, dealers, macro funds, and systematic players. You aren't trading against someone who thinks their stock went 10x on a reverse stock split. In Forex, if you aren't a pro, you're easy exit liquidity. And because it's so big, so global, and so stable relative to other asset classes, the news flow is extremely efficient as well. Macro data is scheduled, widely disseminated, and instantly processed by institutions who live and breathe this stuff. That's what market efficiency looks like. The market adapts fast thanks to sophisticated players. Leverage. Like I mentioned, the leverage allowed here is incredibly high. If you have edge in Forex, and that's a big if, that's amazing because you really can scale your bets massively given the leverage and liquidity. Fees? Forex fees tend to be very cheap in that regard. Now, broker safety. This is mixed. In top tier jurisdictions, there's regulation and risk disclosure. But globally, retail Forex is also where people wander into the Wild West. So Forex ends up being extremely scalable, but extremely efficient with extremely high quality competition. That is a bad combo for most discretionary traders. That's what I mean when I say it sucks. The quality of opportunities for the retail trader are not great. It's not that they do not exist, they're just more limited. Now let's do futures. Number of opportunities. Definitely better than Forex, especially in the sense that with futures, you can trade different products. You can trade indices, rates, energy, metals, Bitcoin, Ethereum, and even Forex itself. So there are way more themes to work with. Additionally, many of these markets are extremely volatile and many move a ton of percents on all sorts of headlines. Many people think that I hate futures. That view is not really nuanced enough. The quality of opportunities in futures can be fantastic. Have you seen the moves gold has been making this year? Or seen how volatile oil and nat gas have been over the last few years? Without a doubt, every year, I inevitably end up trading futures and generally do pretty well trading them. In fact, the biggest trade of my career, where I ended up making over $10 million in a single trade, took place in the futures market, when I bought the Japanese Nikkei futures on the August 5th, 2024 panic. You can hear more about that trade in this video. My bigger issue that people mess up is really with the traders who just trade one product like the E-mini or gold every day. Most markets are fairly efficient most of the time. You need to always move to where the action is. The futures market at least has enough variety where you should be able to find something interesting. So compared to Forex, I do find futures to be far more opportunistic. Liquidity. The liquidity in futures can be absolutely incredible. Obviously, if you're trading contracts that are linked to Forex or metals or the S&P 500, you can build up some incredibly large positions. Leverage. The leverage here is meaningful. Futures are inherently leveraged via margin, so here you can get some big bang for your buck, especially depending on the contract. Fees for futures tend to be pretty reasonable. Overall, you can expect tight spreads and low commissions. Broker safety, very safe and highly regulated to protect the consumer. Competition quality, still very high. A lot of
Yes,
futures
subscribe,
trading is
like.
dominated by sophisticated participants and automation. You can find edges, but you're not picking on scared humans the same way you can in some of the more inefficient and less accessible markets. So futures comes in third. Tradable, scalable, structurally cleaner than a lot of retail Forex experiences, but still pretty efficient and pretty competitive. Now, crypto. Crypto, in my opinion, is the second best product to trade because it's the least efficient in the ways that actually matter for traders. Number of opportunities, huge. New listings, new narratives, meme cycles, squeezes, liquidations, arbitrage opportunities, and more. The quality of these opportunities can be absolutely incredible. On October 10th, 2025, due to all the leverage in the system, a sell-off gained steam and created massive flash crashes across crypto markets. This was the largest crypto liquidation of all time, and certain coins were briefly trading at discounts as high as 50% or more from their equilibrium levels. If you had capital and weren't trading on leverage, some of those opportunities are some of the highest expected value you'll ever encounter. That's the type of opportunity you will never, ever see in markets like Forex. Another example, Trump coin. Whatever your politics are, as a trading case study, it's perfect. Trump's team ends up releasing a coin that isn't initially listed in too many places, and traders that had the right accessibility and were quick on their feet were able to make millions of dollars, even tens of millions. Same for when Melania issued her coin. That is a crypto edge in one sentence. The news flow is less efficient, the participant base is more reflexive, and price can travel farther than it should because should isn't part of the equation with cryptocurrencies. News flow efficiency, low compared to traditional markets. Information is fragmented across different news sources, and that is an advantage if you know how to filter signal from noise. Accessibility, it's accessible, but it's also operationally harder. Wallets, custody decisions, exchange risk, and more. Even the SEC has emphasized how many investors don't understand custody realities or that crypto holdings generally aren't covered by FDIC or SIPC protections. Quality of competition, less sophisticated on average than traditional markets. I mean, come on. We have a bunch of people out there trading Fartcoin. There are some traditional trading firms in crypto, like jump trading, but much of Wall Street still stays far away from some of the Wild West that comes with the territory in crypto world. And there's research backing the broader idea that crypto market efficiency is time varying and sensitive to things like regulation and liquidity. So it's not uniformly tight the way FX tends to be. Liquidity and scalability. Well, it really depends here. The top coins are liquid, but many small coins are not. Liquidity profiles vary dramatically across venues and assets. As for the fees, again, depends on the venue. Sometimes cheap, sometimes brutal. And spreads can be wide in the names that tempt people the most. Leverage. Sadly, in crypto world, you get a dangerous amount of leverage. There are traders that will trade on 100x leverage or more, which is a VIP pass to the trader graveyard. Crypto is second best because it's a target-rich environment for opportunity, but it comes with extra risks. Venue risk, regulatory risk, operational risk, and brutal volatility sometimes. Now, on to equities, which obviously hold a special place in my heart. Equities are number one because they're the best blend of opportunity count, opportunity quality, scalability, and accessibility, while still being inefficient in the exact way traders can exploit it. Number of opportunities, enormous. There's thousands of names, constant sector rotation, and a never-ending calendar of catalysts, including earnings, guidance, analyst changes, product news, lawsuits, M&A, you name it. As for the quality of opportunities, this is the big one. Stocks are at the intersection of where sentiment and emotion consistently create mispricings. That is not a motivational quote. There is deep literature on investor sentiment impacting stock returns. especially in stocks that are hard to value and hard to arbitrage. The beauty with equities is you can still trade currency ETFs or crypto ETFs, commodities, and more.
Yes, let's discuss coins. Take a look. For example, Trump coin. But I don't recommend to invest there. No. Stocks are much more better. And like we discussed, if you subscribe, give like to this video. And if you invest in some coins, yes, you can lose a lot of money because there is no product. That's why stock market is much more better. Like we discussed, for example, Google, even S&P 500. For example, you invest here, Google, and then make money here. Everybody use Google product. Even now use YouTube. It's a Google product, yes? That's why it's much more better than stocks. For example, you could buy here for $16 and sell for $100. Good investment? Yes. Subscribe, give like to this video. Yes, put in comments what stocks did you buy and how much money did you make. And do you like to make money? Do you like money? Do you invest? It's very important. For example, OVO S&P 500. You see, you invest here, buy, and then almost 700. It's much more better than any crypto. Then, yes, put in comments which one. Google, we discuss, and take a look VO. Let's see support lines. Can it reach 680? Yeah, sure. It's easy. It's already almost there. Let's see, 5 minutes. Yes, 680. Or Magnificent 7. All big 7 companies. Tesla, Nvidia, Microsoft, Meta, Amazon, Nvidia. Everything is there. Can reach 67? Sure, it was almost 67 today. And let's see, Google. Google a little bit bearish because it was high capitalization expenditure, but can it go up? Yes, sure. Okay, so subscribe, give like to this video. We go live many times a day, and put questions in comments. Bye bye.